Hi, this is Joe Shahada from Top Tier Capital. Today we had all the market indices end lower. We had the Dow end 0.9% lower while the Nasdaq did the worst at 1.5% down. This first chart I have is of Apple over Nasdaq. Now the green line is Apple and the black line is Nasdaq. And this is an intraday chart on 3 minutes. And we can clearly see the correlation between Apple and Nasdaq. We started off the day down on Nasdaq, and Apple actually started trying to pop in the morning, and it ended up not really working out. But at about an hour or so into trading, we really saw the correlation take hold, and as soon as Apple started to turn down, it brought the Nasdaq with it, and it stayed that way the whole day. The correlation was really strong. When the Nasdaq finally hit its lows, the Apple did too, and they just kind of trotted along, making new lows here and there throughout the trading day, and we ended down at the lows by the end of the day. And Apple ended up having a pretty bad day, down 2.5%, and the Nasdaq was down 1.5%, but you can clearly see the correlation there. This next chart I want to bring up is Apple intraday. This is a 1,000 tick chart, and I love this chart on Apple because it shows the trend really well. I like tick charts. I think they leave out a bunch of the noise of a minute chart. But this indicator on here is the VWAP, volume weighted average price. And you can read more about that. I'll have a link in the description on what that is. But if you do know already, you can see that the VWAP was great support and resistance for Apple today. More support than anything. So the white line is the VWAP and the blue lines are the standard deviations away from that VWAP. And we started off not doing much. The VWAP in the beginning of the day, I don't really care for too much. As trading goes on, it becomes more prevalent. And we can see that when we finally bounced up to the VWAP in the middle of the day, we weren't able to break out above it, and we just kept crushing. We ignored this line like it wasn't even here, and we pretty much followed that second standard deviation line down until we couldn't anymore. There's always a point where you're so far away from the average price that the market is just going to have to be exhausted and then come back up a little bit. But then, as usual, it goes down and down. And then we actually use this line as support at the end of the day, or resistance, resistance at the end of the day, to go ahead and crush it a little bit more at the end of the day. So big sellers coming in Apple. The volume on Apple today was about average to low volume. So the sell-off, if you're thinking it was a great day for the sellers, I'm gonna have to not agree with you on that one. I think it was okay, but and of course I'm saying that because I'm long. I own Apple calls, but either way, I trade what I see, and it didn't look as heavy volume as it could have been given what happened. So this next chart is the Nasdaq Daily. These are futures. And I've been talking about this sideways channel we've been in for a while now, and we broke out of it here. Not really. We closed above it and weren't able to do much with that. We ended up way down. And the same thing happened this time. We were able to close on Friday above the channel, and we were supposed to open and go higher, but the market never gives you what you want. And we had two options. We had an option to go open and go higher, or close in the channel. And we actually closed at the bottom of the channel now. And all it takes is one down day going forward, and we are clearly out of this channel. But we will see what happens. We don't want to call anything yet. We could easily just pop right into the channel tomorrow. Who knows? But that's what we're looking at on NASDAQ. Same thing with ES, which is the S&P futures. We've had this trend channel that's been lasting just as long since the beginning of the year. And we've been in the channel. Today we stayed in the channel. We closed in it. And these are currently trading. This is where it currently is. But we could go up or down. Of course, it's the same thing here. One more down day and it's looking ugly. But I wanted to point out a little divergence that we've been seeing. This is the RSI down here. As the RSI has been trending lower, the market's been trending sideways to higher, and that's never a good sign. When you have a divergence, it can only correct through time or price, meaning the market could go sideways and the divergence, the RSI, could just chug along sideways, or the market comes down and goes where it needs to go to correct the imbalance. So that is the S&P. What else we got? We have the Dow here. This is a chart of the YM futures. And same thing, imagine that, an upward channel that we closed inside, and we have an opportunity to break out. Same divergence going on in the RSI here. So we have an opportunity for something good to happen, direction-wise, unless we just keep staying in this trend. If you're long this trend on any of these, there's no signals right at this point to give up and sell, whatever. Only one down day isn't going to kill you, but maybe two in a row will. So same thing with the Russell 2000 futures. We have a bigger divergence here because, as with Russell, it tends to go up faster than the other ones and go down harder. So we had a bigger sell-off here, bigger rise here, and we have this divergence, and that can spell trouble in the future. We'll have to see. Anyway, that's all for the analysis for today for the major market indices and, well, Apple. So thank you for watching, and please check out our website at toptiercapital.com for more info. We have a bunch more analysis there. And as always, happy trading.